Us now is Mish, Chief Strategist, marketgauge.com. Mish, happy Friday to you, and thank you so much for joining us. Let's talk a little bit about, I want to get your reaction to this PCE data that we just got out, minutes ago. You have core PCE year over year ticking up a little bit, 2.7%. So it's moving further away from what the Fed would like to see, month over month, up 0.2%. How do you interpret it?
First of all, good morning, Diane. Yes, happy Friday. Well, it's interesting because we had some pretty soft CPI, PPI numbers before this. And I think the expectation was that the PCE would also remain relatively soft, and instead we see a little bit of an uptick. And that's not a huge surprise, really. What I thought was most interesting about the number, though, was also what came out was consumer spending numbers are down and income is down. So you have prices going up, and you have incomes and spending going down. So what does that mean for the overall picture of the economy? It's kind of telling you that we don't really know yet at this point which way we're going economically. Are we going into a disinflation, which is why I think the market has been so happy over the last couple of months? I mean, there's other reasons as well, but in terms of just looking at it from an economic standpoint, or are we going to go deeper into a stagflation? And we have evidence for both. And I think right now the market wants to focus more on, yeah, the worst of inflation is over. The Fed will eventually do something like lower rates. We've gotten past the scariness of the tariffs, the geopolitics, and everything's great in the world. But we know that there is this underlying stagflation concern.
Okay, so you mentioned the underlying stagflation concern. Before today's print, I would have thought that that's not what we are seeing. I would have thought, because I know you've been looking at this case of are we at a crossroads between disinflation and stagflation. I would have thought we were leaning towards disinflation, but now to me it is unclear. What indicators confirm which direction we're heading in?
Well, I think there'll be two, well, actually maybe three major factors in which way we go from here. Number one, of course, is going to be the oil prices. Even though there's been so much controversy on whether there's an oversupply, and oil is definitely the way of the dinosaur, literally, because we have nuclear energy coming up. We're more reliant now on gas and coal. That's still going to be an X factor because the point is we're still looking at $65, $66 a barrel, which is much higher than the $40 that people thought. Number two, of course, will be Fed policy and what happens with interest rates. We know that certain sectors, particularly the consumer sector and the housing sector, and a lot of the numbers that have come back more for the stagflation scenario, we need to see the yields stay soft and not go much up further from here. That's going to put more pressure on a lot of things. And I think the third thing really is going to be what happens here with the big, beautiful bill, whether people get tax incentives. I think people are looking for deregulation, which could actually be helpful for pricing. And of course, then there's the X factors of geopolitics and weather and all the other things that impact food prices and also other commodities. So if you look right now, I like to look at three things. Number one is gold to silver ratio. So silver right now has gotten a bit over gold. Generally, that's stagflationary. Two is the dollar. The dollar has certainly been under pressure. And three is if we're looking at soft commodities, I like to look at sugar as the barometer. And it crashed, which was a good sign for our disinflation, except now it's starting to show a little bit of signs of life. So yeah, I think you have to really kind of watch very carefully what happens here and certainly keep your eyes on oil.
Okay, so I'm curious to know, I know there is some positioning that you're talking about that's occurring here, some trends rather you're talking about that's occurring here, but you also have some positioning related to it. Tell us a little bit about the exposure that you have in silver, where you see it going.
Well, right now, I love the fact that even though silver this morning was lower, it's coming back, and at $36, it's one level of support. 34 would be my max level support. And I believe that not only from a fundamental standpoint, from a technical standpoint, and the fact that it's well over the 50-day moving average while gold is hovering just below it, tells me that silver has a projectile potential to $40, $50. So that's one of the big reasons we have our eyes there. Plus, it's needed in the whole grid and AI data center and energy in general. Silver is a conductor. that is still used in that area.
Okay, and I'm curious to know, the last time we talked, there were some trends that you talked about, the thin economy trend. That's related to the GLP-1s and the diet drug boom. But you also got some other names on your list in the EV space, for instance, Tesla. Tesla's been an underperformer compared to the broader group of Mag 7. Where do you see, what's your highest conviction pick on your list over the next 6 to 12 months?
I still like, listen, we can't deny that Tesla, if you're going to compare it to Rivian, Tesla is, the NVIDIA of electric cars still. But I still really love what's happening with Rivian. Every day I read more and more reports of things that they're doing. Like, first of all, we know about the deal they made with Volkswagen for money, but they're rolling out a cheaper car for 2026. I've seen, just from a consumer instinct, more and more Rivians on the road. And trading at $13, $14 right now seems to me like a good base for a potential move. Let's call it $20, $25 that we might be able to see as we go into next year. Tesla, if it holds 300, I still think that the long range for Tesla, given it's more than just a car company, is very positive. It could be blips along the way because of Elon being so controversial, but the company itself and what it does is solid.
That's a great point. All right, Mish, thank you. That's Mish Schneider, Chief Strategist at